Trump didn't just rattle the world, he issued an ultimatum to it. On May 17th, in a move that blindsided even his closest allies, he announced that 150 countries would soon receive tariff bills. Not trade proposals. Not diplomatic overtures. Bills, flat, fixed, non-negotiable. Pay up or get out. The message was clear. The method? Chaos. The letters, Trump said, would be dispatched by Treasury Secretary Scott Bessent and Commerce Secretary Howard Lutnick. But these weren't invitations to negotiate. They were collection notices. Global leaders weren't consulted. No deals were struck. And within days, the backlash hit like a financial earthquake. Markets crashed. Allies ghosted him. And Walmart, America's retail giant, warned they couldn't survive what was coming. Behind the scenes, his own advisors scrambled to halt the freefall. There was no strategy. No leverage. Just a global revolt against U.S. trade policy. The very move meant to project strength had instead exposed weakness. And what happened next would shake the foundations of the American economy. On May 18th, as panic spread, Reuters confirmed that no country had even received the so-called letters. Privately, White House aides admitted the letters were placeholders, bluffs with no structure behind them. The illusion of diplomacy, but none of its substance. Former U.S. Trade Representative Susan Schwab summed it up. There's no legal mechanism to set tariffs by memo. That's not how international trade works. But Trump insisted it would be very fair. What he didn't say, what he never says, is that tariffs are taxes. And they're not paid by foreign governments. They're paid by American businesses and consumers. In fact, a 2024 CBO report revealed that 92% of tariffs from his previous trade war had been absorbed right here at home. And yet the administration doubled down. In April, they imposed a sweeping 10% baseline tariff on all imports, with punitive rates of up to 50% on countries deemed non-compliant. The fallout was immediate. The S&P 500 nosedived 5.3% in days, wiping out $1.8 trillion in equity. Inflation surged. Consumer prices spiked across essentials, clothing, electronics, furniture. And Walmart, during a May earnings call, warned that over 8,000 product lines would face steep price hikes due to rising import costs. Trump called it Liberation Day, but what it liberated was instability. By May's end, not one trade agreement had been finalized. Key partners, Japan, South Korea, the EU, stalled negotiations. China offered little more than a handshake and vague promises. The International Monetary Fund reported that global trade volumes had shrunk 1.6% in April alone, the steepest monthly drop since the pandemic's early shockwaves. At home, the economy felt the pressure. The Bureau of Labor Statistics recorded a 0.7% rise in core consumer prices in April. Moody's economist Mark Zandi didn't mince words. This tariff wave looks more like economic malpractice than negotiation. But the White House refused to admit failure. On May 12th, spokesperson Kush Desai insisted that quick action is restoring American greatness. Yet by mid-May, the score was zero. Zero signed deals, zero recoveries, only a growing trail of economic damage and diplomatic silence. Trump promised 90 deals in 90 days. Nearly 3 months in, there are no deals, just paperwork dressed up as policy. A supposed agreement with the UK ends with one damning line. This document does not constitute a legally binding agreement. That's not a deal. That's theater. Negotiations with South Korea and Japan, once touted as nearly complete, have stalled over enforcement and clarity. Bloomberg sources confirm there's no progress. And China, far from being eager, has only agreed to talk. No timelines, no terms, no substance. Yet Trump's officials kept up the fiction. Commerce Secretary Howard Lutnick boasted on May 14th, "We're locking in results faster than at any time in recent trade history." 2 days later, Federal Reserve data showed a 2.1% contraction in U.S. export volumes. Whatever gains were promised, they vanished. What began as a tariff ultimatum has spiraled into a credibility crisis. The world's largest economy is trying to negotiate by fiat, and it's failing. Trump thought he could rewrite the rules of trade by sending invoices. But instead, he may have sent the first bill for an American economic unraveling. And the worst part? This may only be the beginning. It began, as it so often does in American politics, with applause. On stage, the performance was airtight. Bold words, waving flags, defiant slogans about winning the trade war. But beyond the cameras and lights, the real story unfolded not in sound bites, but in silence. Silent shelves, silent layoffs, silent store closures. By May 2025, the damage had pierced through the rhetoric. A University of Michigan survey revealed that 74% of consumers spontaneously blamed tariffs for the inflation squeezing their wallets, up from 58% just a month before. The concern wasn't abstract anymore. It had reached the checkout counter. Small businesses felt the shift first. According to the National Federation of Independent Business, 42% of small firms postponed investments in April alone. Too uncertain to move forward. The message was spreading. In its quarterly guidance, Walmart warned that prices on imported goods were set to rise between 5% and 15%, driven directly by cost increases from China, India, and Mexico. Target wasn't far behind, forecasting broad price hikes across electronics, furniture, and textiles. For retail giants, the storm could be weathered. But smaller shops didn't have the cushion. They had to choose: raise prices and risk losing loyal customers, or cut staff and break what held them together. Many in rural America, where margins were thin and options thinner, shut their doors completely. According to the U.S. Chamber of Commerce, over 1,300 small businesses filed for Chapter 11 bankruptcy in April, a staggering 23% increase year over year. These weren't statistics. These were family livelihoods dismantled by policies made far away. And yet, from the podium, the message remained the same: we're winning on trade. But out here, in the aisles and back rooms of small-town America, no one felt like they were winning. Not the cashier trying to stretch a paycheck. Not the store owner explaining to a customer why a basic blender now costs 20% more than it did last spring. The strategy behind the chaos, we were told, was brilliance in disguise. Treasury Secretary Scott Bessent, defending the policy on CNN, called it strategic uncertainty, a high-stakes poker game designed to keep rival nations off balance. But the reality was far simpler and far grimmer. The ones being outplayed weren't China or the EU. They were Americans. Bloomberg Economics reported a brutal 11% drop in capital spending by U.S. manufacturers in April, the sharpest decline since the early COVID-era shutdowns. Nearly 40% of small businesses halted hiring altogether. McKinsey Global Institute found that 62% of CEOs delayed major investments, directly blaming the ever-changing tariff policies. Forecasting was impossible. Contracts were frozen. Expansion dreams crumbled. It wasn't leverage. It was paralysis. And then the impact multiplied. Tariffs, once sold as a surgical tool, became a sledgehammer to the economy's foundation. The U.S. International Trade Commission calculated the effective tariff rate had climbed to a punishing 38%. Factoring Trump's new 30% hike atop the historical 8%. Prices soared. The National Retail Federation found the damage in real time. Apparel up 19%, electronics up 12%, home goods up 14%. A cotton hoodie from Bangladesh now costs $7 more. A microwave from Shenzhen, $28 more. For families on a budget, it was a breaking point. Oxford Economics warned the tariff surge could erase $128 billion in GDP if left unchecked through the third quarter. And the bad news wasn't cyclical, it was structural. Walmart, in its May earnings call, told investors that these were not temporary bumps. They were systemic shifts. More than 6,000 product lines had already locked in higher costs. Trump insisted the field was being leveled. But in the cold reality of receipts and spreadsheets, it was American families footing the bill, again and again, week after week. This wasn't economic strategy. It was a hidden tax bleeding through every barcode. By mid-April, the tremors hit Wall Street. The S&P 500 plunged 5.3% in a single week. The Dow shed 1,700 points. Behind closed doors, panic replaced bluster. Then came the abrupt pivot. On April 15th, Trump announced a 90-day freeze on most new tariffs, except those on China. He called it tactical. But behind the curtain, the reason was clear. Reuters obtained a leaked Treasury memo. It painted a dire picture. If April's trajectory continued, core inflation could top 5% by July, and consumer spending could shrink by $200 billion annually. Home Depot canceled $60 million in appliance orders. GE paused expansion in Indiana. The U.S. Chamber of Commerce, usually a cautious voice, issued an extraordinary public statement. Trade policy uncertainty was now destabilizing capital flows at home. Still, Trump tried to spin the retreat. "We wanted bargaining power," he said. "But power isn't panic." What unfolded wasn't strategy, it was collapse, and even the pause offered no real stability. The White House warned that if negotiations failed, the 50% reciprocal tariffs would come roaring back. Chaos was no longer a tactic. It had become policy. And in the aftermath, the cracks grew visible. The bluff hadn't broken foreign governments. It had broken U.S. credibility. Former National Economic Council Director Gary Kahn laid it bare. Trump misunderstood tariffs. He thought foreign countries paid them. They don't. American businesses do. The misunderstanding rippled out. U.S. allies didn't rush to cut deals. They stalled. The EU didn't respond. Japan froze talks. Canada turned elsewhere, finalizing a $14.2 billion LNG agreement with China, one originally pitched to Washington. Even old allies began to flinch. France's finance minister said it plainly. We need stable partners, not shifting terms on demand. Unpredictability, Trump believed, projected strength. But to the world it revealed something else, a lack of direction. And markets don't bend to chaos. They retreat from it. In the end, the only players left at the table were the ones Trump had claimed to defend. U.S. businesses watching demand shrink, watching costs climb, and waiting for relief that never came. They weren't playing poker. They were just trying to keep the lights on. And the bluff? It wasn't called. It just burned.